This video is for general informational purposes only and does not constitute legal or tax advice. Tax rules can change, and individual situations vary. Every day, you pay VAT. It's added to your shopping, your services, and most things you buy. But most people don't actually understand what VAT is, who really pays it, or how it works behind the scenes. Many people think VAT is just an extra charge businesses add. But in reality, businesses don't keep VAT. They collect it on behalf of the government. VAT stands for value-added tax. It's a tax added to most goods and services in the UK. The standard rate is currently 20%. Although businesses collect VAT, the customer is the one who actually pays it. The business simply passes it to HM Revenue and Customs. Businesses must register for VAT if their annual turnover exceeds the VAT threshold. Currently it's £90,000. Once registered, they must charge VAT on eligible products and services. When a VAT-registered business sells something, it adds VAT to the price. This VAT is collected from the customer and later paid to the government. Businesses also pay VAT when buying goods or services. This is called input VAT. In many cases, businesses can reclaim this amount. Here is a short video explaining the process.
Ever wonder how VAT, or value-added tax, actually works? It's a chain reaction of tax from production all the way to you, the consumer. Let's follow a t-shirt. A retail business buys it from a supplier for £50. The supplier adds £10 in VAT. That £10 is the retailer's input VAT. They've paid it, but here's the key. They can claim it back. Now, the retailer sells that shirt to a customer for £100, adding £20 in VAT. This £20 is their output VAT, which they've collected on behalf of the government. When it's time to file their return, the retailer calculates their total output VAT, £20, and subtracts their total input VAT, £10. They only owe the government the difference, just £10. The full £20 tax is ultimately paid by you, the final customer, who can't claim anything back. The business simply acts as a tax collector along the way.
The business only pays the difference between the VAT it collects and the VAT it pays. This is how the system ensures tax is paid fairly across the supply chain. This means VAT isn't a direct cost to most VAT-registered businesses. It's a system designed to tax consumption, not business revenue itself. For example, if a business sells a service for £100, it may charge £120 including VAT. The £20 VAT is later paid to the government, not kept by the business. Many people assume businesses increase prices purely for profit. But often, part of the price increase is simply VAT being added. Understanding VAT helps you understand where your money goes. It also helps business owners manage pricing and avoid costly mistakes. If you want simple explanations that remove confusion, subscribe to Simply Explained Studio. We break down tax and legal topics clearly, so you can make informed decisions.